Morning, everybody. Good morning, everybody. So, we're talking about the basics video for Rich Vendiger. Rich Vendiger focuses on NAS. He's a NAS 100 educator, and that's just short form for NASDAQ. NASDAQ is the market that has a consolidation of different Fortune 500, no, Fortune 100 companies. So those companies basically have a huge take in directing the order of the market, companies like Apple and things like that. So basically in that video he was just breaking down some of the fundamental things that one needs to know. He's very big on technical analysis. He really likes everyone to understand and learn how to analyze the market trends and the charts and make a decision on how to go as far as entering the market and trading and doing what they need to do in the market. So the video breaks down understanding market trends when there's an upward trend and there's a downward trend, how that needs to look on the charts. And he also talked about understanding what the candles are, candles, the different entry points, and how you can identify the entry points of candles and the different types of candles. There's a chart that we can all have that really describes the different names of candles and what those candles mean, especially when it comes to determining your entry and your exit point. And so let me see what else. Yeah. And then he also talked about being able to have a trading plan for yourself so that way you're able to plan your day and know exactly how to make your trades responsibly and how to keep up with managing your risk as well. Yeah, keep up with managing your risk and the psychology of, you as a trader. So those are the things that he covered in the basics video. He went over everything that, one needs to learn. And all of those basic fundamentals, of course, they are also in the academy. So if you're not very familiar with how the charts are set up, whether it's going in an upward trend. So basically the market trades up, down, or sideways. We all kind of know that. So he wants, everyone to understand those basic concepts first. So what it looks like. So when you are analyzing the chart and you're looking at it, you know exactly what you're looking at. And you know how to really get in the market. He mentioned, always making sure that your trades are going in line with the trend. You don't go against the trend. If it's an upward movement, then of course you want to, make your decision to trade up. And if it's downward, then you want to make a decision to trade down. That means buying and selling, of course. I think we're all familiar with that already. And then he also talked about, let's see. He also talked, I'm looking at my notes. Sorry, guys. He also talked about how to measure your lot sizes. So that's another thing he wants you to know, how to measure your lot sizes based on the size of the account that you have. So that way you are doing proper risk management every single time. And measuring your lot sizes, he recommends definitely using some of the tools on the Akash X platform, which is using the calculator to measure your lot sizes if you need to, so that way you know exactly how much of your account you can sort of risk every day. And the way I break it down is depending on the size of the account that you have, you kind of break it down into how many lives that your account has. For example, a $10,000 account, I would say has 10 lives. And those 10 lives basically means that, okay, you are able to risk out of 1% that you can lose on that account, you have 10 chances to make up either your profit or to grow the account. So that way you can sort of measure your risk accordingly. And calculate properly what lot sizes will work for you as you're taking your trades. Yeah, that's pretty much the basics of what Rich Vendiga was discussing in the basic video. It was a 20-minute video, so yeah.
Okay, thank you.
Yes, Dr. Love, thank you.
Yeah. Ezekiel, break it further. Speak Nigerian English. Dr. Oja, speak American English for us. Ezekiel, are you with us today?
Yes, I am. Good morning, ma. Good to see you. Dr. OJ, good morning.
Good morning,
And
Mr.
good morning. Good morning, all the superstars on the call this morning. Good to have you on the call. Let's see how we can double down a little bit more. Thank you, Dr. OJ. A good one there. So many things I've learned myself from we call that, is it training review? We are reviewing Rich Vandega. That's who we are reviewing this morning. So let's go. What time do I have? Dr. Love, me and my time. Sorry.
You know you like to time yourself.
I like to time myself. This is 10:26. Okay, so let me do 10, 15 minutes. So I hand it back to Dr. Love. So I'm going in on, I just want to double down a little bit on Rich Vandega. Rich Vandega, I'm not going to talk about what Dr. OJ has talked about. When I say Dr. Love, Dr. Oja, I'm feeling like I should be a doctor too. Please
Dr.
tell me
Ezekiel.
what to do. That sounds sweet. All right. So let's go in. Where do I have coming? I always have a lot of screen. I want to see which one will do the work for me. Let me see if it's this. Is it gonna be you? Okay, yeah, that's it. Okay, so let's go in. Sharing my screen now. Sorry. Share myself. Okay, so I don't know. Can you see my screen? Is it I want
Yes, we can
everyone to
see your
see
screen.
trading view. The trading view, right?
Yes.
Okay. Surprise, I'm seeing my own self. Let me reshare so I can see my trading view. Okay. No. Okay, yeah, this is good now. Okay, so Rich Vandega, actually, it took us through a whole lot. I see myself, not what I want to see. All right. So this is what Rich Vandega is about. Just like Dr. Oyindamola talked about, that is very big on market, the market analysis or technical analysis, sorry. He's so big on technical analysis. And if you join Rich Vandega, it means you're really ready to learn how to trade and trade independently. Some trade that were called this morning, I was telling my wife that this educator called this, but I'm not saying that. I'm seeing a different thing in this direction, though it's going to happen on the long run, but I think it will happen at this point, and lo and behold, it didn't happen at that time. It happened at exactly that point. And funny enough, I was already on that trade. And as soon as it stopped me out, it happened. I feel so pained, like, wow. When you start thinking of being independent, then you need Rich Vandega, right? There are other educators that are teaching good, teaching so jewelarias and the rest of them, but there's a way he did justice around a strategy you can really, really, really get yourself acquainted with, which is the smart money concept. But I'm not going to go deep into smart money concept yet. But let's just take it from the fundamentals, from the foundation of it. So first of all, there are things you need to see that drives the market, and that is in terms of market structure. So Rich Vandega talked about three pillars or three essentials that you need for you to be able to be a successful trader. Excuse me. Those things are: you must have your strategy right, you must have your risk management right, and you must have your trading psychology correctly. So if you have your strategy right, your risk management right, then your trading psychology is intact, then you are good to go. But if you don't have these three things right, then you're not good to go. Then on the market, there are about, on market structure, there are about 6 structures that drives the market, and other ones too drive, but at least if you can run with 6 for now, then you're good. And what are those 6? The first one, whenever you see a M, when you see a M, let me get where am I gonna get this now? Okay, coming. I want to get my brush. Okay, yeah. So whenever you see a M, whenever you see a M coming, whenever you see a M, you know that a structure is forming, and that structure that is forming, is prompting you to get ready for something. The structure that is forming is prompting you to get ready for something. And then let's go for it. Whenever you see a M forming, a hem, whenever a M is forming, is telling you to get ready, that the market is forming is giving you a signal for a sell. It's giving you a signal for a sell. Then that is to say that you're seeing a hem forming on the chart, and that M with a neck point. And once that neck point is retested, then you are likely to see a sell. It's in an indication of a loss in momentum on a buy, on the bullish market to a bearish market. So yes, when you see a M, market goes up, market, push back, market goes up again, push back down to the support level, and then retested the neck level, then you're expecting a sell. That is 1. Then 2 is when the market forms, a head and a shoulder. When the market forms head and shoulder, all right, is also a sign that the market is going to sell. So you can look at the shoulder as being 1, all right, 2 being 1, 2, and then 3. In as much as 3, the shoulder 3 is not greater than the head 2, then it's an indication that the market is going to sell. You're looking at on those, all right? And then these 2 patterns, you can always see it play out. There's another 2 other pattern, but let me just keep it at this so that when you go through his video, you'll be able to understand how those one plays out on the trend, the uptrend, the downtrend, which is where I love those 2 though, Rich Vandega, where he pitches tent. So whenever you see this, you know market is giving you a sell, it's giving you a signal for a sell. And when you see this, it gives you a signal for a sell as well. Those are things you need to know fundamentally, basically, on market structure, as those informs your trading decision. So these 2. And then for a buy, you're expecting a W. When you see a W with a neck point, and whenever that neck point is, when there's a retest on the neck point, you know the market is about to buy. All right, you know the market is about to buy. All right, and then when you see the inverted head and shoulder, that is this way, the shoulder, the head, and then that's head and shoulder. So long that the shoulder 3, all right, this will be the 3rd one. The shoulder 3 does not, go beyond the head 2, then the market is about to buy. All right. So we have a M giving you that, the bullish momentum is getting exhausted and the market is about to go on the downward trend, or the head and the shoulder showing you that, the bullish momentum is done with everything it's doing and is about to sell. All right. Then the W structure telling you that the market is done with the sell momentum, is getting ready to buy, and the inverted head and shoulder telling you that the market is getting done with the sell momentum and is about to buy. So you have those structures on your mind. All right. So now let's talk about the supply and demand, the supply and demand trading type, or trading, if you want to be using supply and demand trading style. So if you want to use that strategy, at least you start from there before you can now start looking at the smart money concept. So let me just do a little bit on the supply and demand. Market trades from zone to zone. I'm clearing this now. Market trades from zone to zone. And all this M, the W, the head and shoulder, the inverted head and shoulder that we are talking about has already given you a representation of market trading from zone to zone. And those zones that market, respects as it goes up and goes down, when you see market going up and going down, Chairman will say market doesn't stand on one leg. Based on my discipline statistics, I'm able to pick that. What information that tells you is that market averages from time to time. So if it goes up, it tends to average, into the midpoint, and then maybe goes back up and tends to average again, and then maybe goes up. So market from time to time makes its movement, makes its momentum, and then averages. Movement, momentum, averages. Movement set out on momentum, averages. So that's why you'll be seeing the market doing like that. And in as much as you know that market will always averages, it will keep your psychology intact when market is going up, and it will then come down. You might be expecting it to just go up and just keep going like that. No, you can just go up and keep on going, or go down and keep on going down like that. And always expect the market to averages, as it moves, the price actions will always averages out, and those are the ups and downs that you are seeing in the market. All right, so watch out and be comfortable with those ups and downs. That is how the market is, and that's how life is generally. You make huge sales in your business is booming, at some point it slows down, at some point it moves up again, and that's just it. So line, nothing just happen on a steady flow. There's always that fluctuations in between. So now we look at the supply and demand, and like we say, market trades from zone to zone. All right. So supply and demand is actually the retail trading strategy. So the retail trading strategy is supply and demand. I was really so I was happy when I discovered this. And then the fair value gap, which is like the university of this strategy, is the institutional trading strategy. So you need to learn you trading as an individual and you thinking for the institution. All right. If you're getting it, just put a 1 on the chat box. Let me be sure we are still on the same page. So you trading as an individual and you thinking like an institution, because those who started this foreign exchange, who have always been on the foreign exchange market, are actually the institutions, the likes of the banks, the likes of the corporation, nations, those are those who actually started foreign exchange. Those are those that foreign exchange is meant for. It's along the line that a retail trader like you and I, individuals, are coming in. So what we watch out for is we trade supply and demand. So on the supply on the supply side, all right, you need to buy when it's at the when the market is at the supply zone. So you need to buy, and when the market is at the demand zone, you need to sell. All right. When the market is at the supply zone, you need to buy, and when the market is at the demand zone, you need to sell. So how do you figure out the trend in the market, whether it is an uptrend or a downtrend? Then that's where the concept of
Hello, Ezekiel.
lower lows and yes, sir.
Please take that again. So when they take the demand and supply zone again.
Okay, I said to sell when the market is at the supply zone, you need to sell. Why when the market is at the demand zone, you need to buy. When the market is at the supply zone.
You were saying it's the opposite, so that's why I had to call your attention.
Oh, okay.
You were saying when the market is at the supply zone, you need to buy, and when it's at the demand zone, you need to sell. That's why I had to call your attention.
Thank you, sir. All right, sir. So when the market, okay, we've put that right. When the market is at the supply zone, you need to buy, and when the market is at the demand zone, you need to sell. So now let's bring in the market trend.
You have made the same mistake again. When the market is at the supply zone, you sell. When it's at the demand zone, you buy.
Yeah, true.
You keep mixing it up. Please correct it so that people are not confused.
All right, sir. Thank you very much. When the market is at the supply zone, you need to sell, please. So that I have the information on my mind and I said it the other way around. So now let's look at the chart we have here. I'm still going to draw that out. I wanted to bring out the concept of higher highs and higher low, and this is the trend in the market. You have to first of all watch out for the trend in the market if you're trading supply and demand. And supply and demand is actually for the retail traders, call it at the beginning level. All right. But since you are not the only one in the market, you need to also be learning what the institutions are trading. So what the institutions are trading is those fair value gap, order block, order flow. You need to be learning it because they are actually the movers and shakers. They are the one that moves the market anyway. So if you don't learn what they trade and how they trade, they will deal with you. That's what happens. And At there no time they are not in the market, they are in the market. So you don't know when they come in and when they go out. It's when you understand the kind of moves that happen in the market, then that's, gives you an idea that these people are around. And then you get ready to trade what they trade. Because if you trade against them, you're on your own. You don't have the kind of equity they have in the market. So the way they move price is you can't fight against that. You have to understand that they are present and they are moving price. So now let's look at when the market is forming, an uptrend. What makes you know that the market is forming an uptrend? When it's giving you, higher highs and higher lows. So the market is giving you an uptrend, right? I think I have 5 more minutes. Don't worry, we can still continue some other day. So when the market is forming higher highs and higher lows, the market is giving you an uptrend. And what do I mean? This is just what it is. You can see what the market is doing right here. So right here, this is a low. The bottom here is a low, this first dot, and the up here is a high. And at the same time, this high has given us, because of the way the pattern is going, this has given us a higher high, and then below here is a higher low. All right. So right here at where we have the higher high, if you draw a line here, it gives us a break of structure. All right. That gives us a break of structure right there. So, all right, I'm not writing those things so that I can spend my 5 minutes well. So this gives us a break of structure. This is higher high, HH. This is higher low, in case you are taking notes. This is HL. Then the next one, higher high, another higher high, and this is higher low. And in between, where this second higher high stops, you can always draw your break of structure there. And when market is forming this, this has given you a pattern of what the market is, likely going to do. And anytime the market is forming a higher high, higher low, you know that the market is giving you an uptrend and the market tends to buy. All right. That fine person is Mary Ojo. Write on your notes. That was what I said, not on my board. All right. So you can see what is happening. So now you can see this pattern has happened the first time, the second time, and of course, it has happened again the third time. So if you have driven this for a scalping, you would have made some profit, all right, expecting that it's going to retrace and then it's going to, pull up again. And then the pulling up, you can make maybe 10 pips in between that, depending on, the time frame you have. And that tells you what is going up in the market. There was one new thing I learned yesterday, I won't go into it yet today, so I can finish up with this. So the other way around, when the market, if you turn this inversely, you see the market gives you the downtrend. So now I'm going to draw that right now. Let me draw the downtrend. So when this is inverse, that is the market is giving you the downtrend. So let's see how the downtrend looks. So the downtrend will now be forming lower lows and lower highs. So this is when it goes this way, goes this way, and then pull back, then go again, pull back, go again, pull back, And once you see this, the market is giving you, it has started doing a downtrend. And don't forget, trend is your friend. You don't go against the trend. You don't go against the trend, except for some reasons of what we call break of structure. All right, but we won't reach there today. On the next session, we can look at break of structure. So now you see what the market is doing here. All right, the market is forming lower lows and lower highs. So this way, lower lows and lower highs. All right. Let me just close up this one this way. All right. So once market gives you these lower lows and lower highs, you know the market. So this is your high, this is your low. So this is your lower high, this point, while this is your lower lows. This is your lower high, this is your lower lows, this is your lower high, this is your lower lows. So based on this now, if you have to enter this market, for instance, and then you want to catch a buy on these higher highs and higher lows, all right, let me just pick a short buy there, all right. So this point gives you a demand zone, all right. This point gives you a demand zone, and on your demand zone, let me play around it the way you are setting out. Let's say you pick this as your demand zone. You're expecting that the market will retest this. And when it retests this, you drive it. All right. All right. And the market has not given you all these other ones. So market has formed this, goes up, came back into this, went, and as soon as it retests this, you are looking at it like, okay, maybe it might do more two higher highs. And then, of course, you can set out on your 20 pips or your 10 pips, all right, on this now. And how do you do that? Just get ready for it and put your stop loss somewhere around here. Put your stop loss right here. Right, get out to draw this now. All right, so put your stop loss here. I think I've not been able to fine tune the drawing of this yet. All right, so you put your stop loss here and you measure that it's going to give you, maybe you can bring it up to this point right here. You can just target it up to this point, all right? Or you use that little thing we learned from Smart Scan, and that we should just target. Yes, sir.
Okay, there are two of them. There's a short one and there's a long one. You're using the short one. This is for sell.
Oh,
Check,
yes.
you see the
True. True. Thank you, sir. Thank you, sir. All right, this is my long. Okay, so anytime you're aiming for, you're aiming for a buy, use the long. So let me say I just want to target 1:2. All right. So look at it here. I am expecting that if the market doesn't respect my analysis, it can only go, I take it to my previous low. All right, my previous low at this point, I'm taking it to that point. All right, I'm actually doing this as if you're in the market. So this is my low. All right, I can make it a little bit above, below the low, a little bit below the low. Yeah, that way. And then if it's 1:2 risk to reward ratio you're looking out for, you double this. Like, okay, what you have here, you have like, you just, move times 2 of that. So if it goes against you, if your analysis is not respected, you lose this. And if your analysis is respected, then you win times 2 of what you should have lost. So this way, the market is on the uptrend. You've been able to figure out your higher high and your higher low, and you've been able to use supply and demand retail strategy to enter the market, and you're expected to take profits. There are a lot of persons who are doing this, and they are doing it. They may not even have a better understanding of why they are in profit or why maybe they're in losses or something. They are just seeing candle jumping up and down and they are following it. So if you're new and that's what you're doing, just try to double down on your supply and demand retail strategy and understand that, okay, that is what you are doing. And then you stick to it, trading from zone to zone, all right? From the demand zone to the supply zone, you're trading from those zones and you're making some profits out from there. So the same thing can happen right here. If the market is at the supply zone, you can always aim it as well, taking a shot. All right, first of all, you check at what point do you have a resistance there. You can check that out. like, okay, this is your resistance zone, and you're expecting that once the market taps into this again, you are going to ride it. And lo and behold, the market came to tap into it. As soon as the market taps into it, pick your shot and then put it right there, expecting that the market targeting the previous high and expecting that the market will go ×2 of that. At least any trade you are aiming at, at least you'll be looking for 1:2 risk to reward ratio. If you lost just 1%, 1%, and if you're gaining ×2 of what you should have lost. All right, but if you can't aim 1:2, you can aim 1:1, but be sure of your entry. That if you're trading demand and supply, you're trading zone to zone. So at your resistance here, you've been able to figure out that the market is doing a lower lows and a lower high. Then you can go into the market and just quickly take the little profit, 10, 20 pips is okay. Yesterday in the afternoon, was that New York section also? I saw the volume in the market was so low. I didn't do anything 20 pips. I reduced it to just 10 pips and take the profit and run away because the volume was low. I discovered that it's giving me a ranging market. So the ranging market is the next thing we would have talked about. Then the ranging market, we'll look at it in the context of the institutional trading, how they trade when they now start giving you some manipulations and mitigations. Those ones we'll talk about it on the ranging market when they could manipulate the market and then mitigate the thing, and then all that they are doing it to actually see how they too can get money out of the market. So you tend to understand that. So consolidation to some extent is an indecision of the market. Consolidation to another extent is the build-up in the market. So it depends on what you've been seeing in the market. That makes you know what is about to happen when you see market, doing this, maintaining the same height and low, just trading within this range like that. This is consolidation that Rich Vandega also talked about. So anytime you're now looking at this type of consolidation, train your mind enough to start looking at smart money concept where you are able to figure out that consolidation, what is going to do next, whether it's giving you a build up or whether it's just being confused and you need to stay out to understand what's going to happen next, if the market is going to hit a uptrend or it's going to hit a downtrend. And then if it's going to give you a fake out, he wants to trick you into the market and then take you out on stop loss. So you can see why I don't want to talk about it here too, because there are some other grandchildren that this one has. But just know this uptrend, this downtrend, these higher highs, higher lows, these lower lows, lower highs, and these consolidations. So let me pause there. Thank you, everyone. If you got value, put value on the chat box. Thank you, Dr. Love. Chairman, thank you, sir. Chairman, give me so much guide. Thank you, sir.
Okay, guys. Ezekiel, thank you. If you got value from what Ezekiel has taught, put value on the chat box. And if you have questions, please ask Ezekiel. Before Ezekiel will jump from here. Apostle Eric, yes, you can ask your question.
Sorry, Amaka posted a question here. He said, does it mean demand zone is support and then supply zone is resistance? 100% correct. So Amaka, that's correct. So some persons call it, they are trading support and resistance. And of course, that can also be your demand and supply zone. So that's correct, Amaka.
Hello. Good morning.
Good morning, sir.
Please, my question is like the M, the W, the head and shoulder. Please, what time frame is the best to look at that? what is the best time frame to look at that?
First of all, asserting you need first of all asserting on your market direction, the trend, whether it's uptrend, downtrend. Then sometimes, like what was I looking at? I was looking at 1 hour, 4 hours time frame. I discovered that it's just being bullish, 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 and those patterns were not forming. So if the patterns did not form on a higher time frame has given you the information required. It has, given you that, or informed you that the market is on uptrend or downtrend. Then from that, you've gained some understanding. Go to the lower time frame. You can come to 15 minutes and check if those market structures are playing out on 15 minutes. If it does not play out very well, go down to 5 minutes and see what the market is doing. Like what I did yesterday, that I saw, even though I'm seeing the M forming on the market at 15 minutes, but the volume was low. So I had to go and be doing I was playing my thing, even on 1 minute time frame, because I saw it was moving, it was more or less like a ranging market. So I picked out those patterns, the M from my 1 minute time frame. I haven't seen that the market is doing a bit of, a downtrend in that time zone, and I was able to make some profit within them. So asserting the direction, market direction, a higher time frame, come to look out for those structures on 15 minutes, 5 minute time frame, and see how you can play with that.
Okay, thank you.
You're welcome, sir.
Okay, do we have another question for Ezekiel? Okay, thank you. This is being recorded so that we can watch it over and over again. So you have the opportunity to go over you have the opportunity to go over smart money concept again, because our two teachers that will teach us are not here. So I won't be picking new persons. Khadija to be here tomorrow. Dabolo didn't give me any reason, but I just hope that, or should I pick one person? Dabolo have done this twice. He won't say he won't come to class, and at least Khadija took permission that she was not going to be here, so she'll help her push it. Let me look for another person that will come and tell us what you learned for smart money consults. Mr. Kola, I'm coming to your table. Mr. Kola Oni, you would help us tomorrow, smart money concepts with Khadijat.
Noted.
So we are going over our smart money concept tomorrow again. So yesterday after class, somebody chatted me that where is it? So that was why I did the video. But since we are all here, I don't want to assume that we don't have any new person amongst us. So I'm going to just show us where you can find it again. So when you log into your Akashes, Akashes website, you go to Academy. Under Academy, you see education series. So that's what we are looking at. Under education series, you see Rich Vandegam. Then we are going through what Rich Vandegam have for us. So this is what we talked about today is basics. So tomorrow we'll look at smart money concepts. Then we'll move to liberty strategy. So you can go ahead of us. study everything here. If you have the time, you can go through your smart money concept, liberty strategy, the risk management, trading psychology 1 and 2. Then we're also looking at studying all he said about NAS 100. So what we want to achieve by the end of this, our NAS 100, we have upped our game on trading NAS 100. Okay, so that's it. Tomorrow we'll continue with the class. Go study, guys. Go study. Rescue yourself. Those that came early, the video we're watching, talking about that she understands that she's to rescue herself. We also understand that we are to rescue ourselves. So the mission we are going on now is Operation Rescue Yourself. Operation Know It. That's the one I was doing one video. I remember that even though we are in Akashes is tools that brought me into Akashes. I wanted to come and use scanners. I wanted to come and use trading alerts. But when I came into Akashes, I realized that I can actually do it myself, like if I commit to it. So that's it. So we have come into Akashes. Some of us came in with different things. Like Shamayo would also always say, don't tell people about profit money. Don't emphasize on profit money. Don't let some people come in. Shamayo, the truth is that all of us will come into different. It's just like when you go to the house of God, many people came in for different reasons. Some people came in for power, some people came in for money, some people came in, they came to seek God. So the thing, when you come into Akashes, two different things we brought in. Some people came into Akashes because of tools, signal, scanner. Some came in because of the money, profit, and some came for the academy. Even when I was coming, I came in because of the tools that I want to come and use scanner. I want to shorten my journey. But now, I'm here learning, like, say, another thing not there. So anything that brings some people that was bringing people in, maybe we just leave there with that. Yes, Dr. OJ, I can see your hands up.
Yeah, you're so right, Dr. Love. Thank you so much, Mr. Ezekiel. That was an amazing training. Me, I just summarized everything because I thought that was what you wanted us to do, but it was great breakdown. Yeah, Dr. Love, you're so right. I was talking to someone yesterday and, she joined Akash X with the same thing. She had the notion of, oh, tap to trade. She's going to get her, challenge account. She's going to get, live account. So she just wanted that quick fix. But when that didn't happen, she was discouraged and she was like, oh, doctor, oh, it's a scam. Why are you there? Yada, yada, yada. And I'm like, okay, I hear you. But first of all, it's not a scam. One thing I know is, of course, a lot of people, it might take time. Not everybody will pass their challenge account as quickly as some people. But the reality of the matter is what that pushes you to do is just for you to double down and learn. Because what Akash X is it's a school. It's where you come to learn a skill. So while they have all these additional tools, it's like what I tell people with the new outbreak of AI. I mean, AI is not really new, but a lot more people are getting to know about it now. AI is there to support our human intelligence. You cannot put your human brain to the side and say, AI, think for me. AI, do this. Yeah, AI can do so much for us. But what makes AI fantastic is the fact that human beings get to maneuver AI and use it to make us even better. So with Akash X, it makes us better traders because now we get to use the tools, but regardless of the tools, you get to actually know what to do. What if the Akash X platform will crash and something happens and we can't access those tools? But you can still jump in the market and analyze the market, look at the upward trend, look at where the fair gain advantage is, and then you can just maneuver yourself and know that, okay, I can enter here, I can get out here. Or if I'm here, I can get in and you can do anything you want. And that comes with time. So yeah, I really love the fact that Wealth Hub is encouraging us to learn. So if anybody is being told like I am, and I know there are people that this might not work for them because they don't want to learn. Our people are like that. We don't want to learn. We just want someone to put the food in our mouth. In fact, when they put the food in your mouth, you still want them to help you chew it. Like, okay, what do you really want to do for yourself in this life then? If you're really not going to make an effort to get better. God gave us a brain, but he wants us to, he gives us the free will to use that brain. So that free will is where now you get to learn, you get to up level, you get to use your skill. He gives you the gifts, you get to make it better. You get to do everything with it so that way you can really achieve and get the promise. Some people will say, God is a scam. He doesn't answer prayers. He does. But there is a place of human engagement. So thank you so much, Dr. Love. Thank you, Chairman Uriel. Thank you, everyone, for making this opportunity for us to come here and learn. I truly, truly love it. I have to get up at 3 a.m. now so I can pray and get ready for 4 a.m. class. It's not easy, but I'm determined to do it because I want to learn. I want to get better. I love you guys. Bye.
Thank you. Thank you, OJ. Thank you, Dr. OJ. Ezekiel, yeah?
Thank you very much, but Dr. Ida, well, our session is a balance. At least we've done the psychology, which you've gone so deep on, and we've done the technical on the demand supply retail strategy. I think we have a balance, Dr. Love, if you agree with us. So those for yesterday, please, for tomorrow, give us a balance too. I will be glad. I want to learn. That's why I'm here. Now there is a learning session. You see, I'm available. If it's not a learning session, you miss me. So another thing I want to draw out is those scanners, those tap to trade, they are very tempting. And if you're following scanner tap to trade, and that's all what you want to do, when scanner does not call, you will just see yourself jumping into the market because normally we human beings don't really have that patience to wait. You've always been relying on scanner. When scanner doesn't call, you will not know when you tap buy or tap sell that you know nothing about. Okay, so if you want to be doing that in between, then start learning so that when scanner has not called, then you can know, okay, is it good to enter? Is it good to stay out? Stop. Then you'll be able to learn to be patient. You will know why you're waiting and why, sometimes you may not be patient with scanner because you don't know why the scanner is not calling because the scanner is waiting. So if you understand why the scanner is not calling, it's going to help you build patience that is required. Like Chema will always give us the 4P, the process, the patience, the practice, and the profit. Those 4 pillars are very, very important. And if you're adding knowledge to it, trying to gain the knowledge, know what to do and all that, then you will know why scanner has not called. And you will know why you should stay patient for scanner to call. And if for any reason you should enter the market, you will enter the market from the place of knowledge. So that's what I want to add to it. So you should start learning and not be 100% depending on the tools so that you will not be tempted to enter the market when the tools has not said enter. Thank you, Dr. Love. Thank you, Chairman.
Thank you. Hello. I've entered market many times when the tools have not said enter. Well, just like you said, when I don't wait, I don't see. If I wait, I don't see. These people are not calling today. Not allowed today. They don't want me to trade today. Before you know it's I enter market jackpot. So I understand. Yes.
That's that boredom that you were asking about yesterday.
That's the boredom I wanted to say. That's the one you asked that is the devil's playground. I answered you yesterday that he will come and be telling you, go, 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 go. Sit down, patience.
Okay, the boredom. Okay, all I will say, so the lower country, I'm not going to make money. Okay, so when there's no trade, go and learn. Or throw away your phone. Like one young guy that told me was experience one time. Was it postpart? I was saying, one guy was telling us story one time. That he's when he was just learning, he has made his tutor would tell them when to leave. So this day his tutor was not around. So he was still young, $40-something was really money for him. He has made $40-something. He was very happy. He wanted to go and do something with his $40. But he just let me enter the market small. Let me enter the market. And for all his $40-something went away. That day was like the darkest day in his life. Everything, Matrix took everything away. He learned a very hard lesson, not to overtrade. That's that time. Okay, guys. So tomorrow we'll do smart money concept. Don't worry. Take your time. Go and learn. Let's go. Go back to the classroom. Okay. Bye-bye, everyone.